Moving on, Happiest Mind doubles down on its AI bet. Margins expand as execution continues to improve. And if you look at the Gen AI business, that is also scaling up rapidly. In fact, my colleague Sharad spoke with Joseph, the co-chairman and CEO of Happiest Mind Technologies, and also with Venkatraman Narayanan, the MD of the company. Let's listen into that conversation.
Very strong set of numbers coming in, and it's a very good move coming in. This reported CC growth was 1.2% sequential growth, but the margins did expand. Just want to get Joseph into it. Overall, how was the Q3 numbers and this margin expansion? What led to this?
So if you see, we reported, as you rightly pointed out, Sharad, a pretty healthy set of numbers. Our revenue increased constant currency basis 1.2%, and there were a couple of drivers for the growth in this revenue. If you look at it from a vertical standpoint, both BFSI and healthcare and life sciences vertical have driven the growth. BFSI grew by a healthy 700K during the quarter, and healthcare and life sciences did even better, growing by $1.7 million quarter on quarter. So in the case of BFSI, we had two of our large customers, one based out of Southeast Asia and the other one based out of the Middle East, ramping up significantly during the quarter, which is reflected in the growth in BFSI segment. And this is in spite of the fact that some of the Artha revenues that we were expecting has got shifted and moved to Q4. If not, I think the numbers would have been even better. And in healthcare and life sciences, we are seeing growth across three of the sub-verticals. Health tech, we had a couple of customers ramp up quite well. One of them is an India-based company for whom we are building a platform that would help them in their diagnostic and clinics. The second is a US-based customer that has a marketplace for hospitals and healthcare systems to source their supplies, whether it's gloves or injections, syringes, things like that. And again, this has grown quite well. We started a couple of initiatives for this customer during the quarter. And the third is a pharma company where we had a little bit of a ramp down in Q2 and ramped up in Q3. So these have driven. From a geo perspective, I think your Africa, Southeast Asia, and Middle East have all done quite well. India has done, has contributed a bit, but these three geos have contributed a fair bit of growth. From a margin perspective, you've seen an improvement in gross margins and an expansion at the operating margin and EBITDA level, and this has been on the back of increased utilization. You see our utilization has gone up from 80.2 to 82%. So that has contributed. We've also had a proactive effort in ensuring that we reduce our bench, especially on the aging side. So all of these factors, along with the favorable rupee dollar regime, have contributed to the expansion in margins.
Right. Thanks for that. But Venkat, I need to ask a question because I remember earlier, it's been almost 3 to 4 years since the listing, or maybe more than that. I had asked you, and behind you there was a banner, it was Agile. Now the banner is suggesting AI first. Now the world itself is spooked out, whether the SaaS model or maybe the digital model, is it being challenged by the AI segment? To industry perspective, what it is all about, and how are you differentiating yourself with other IT companies also when it comes to the AI?
Yeah, so when we began the company 14 years back, we were at the cutting edge of tech at that point in time. Digital was literally unknown. It was limited to what we used to refer as social mobility, analytics, and cloud. That's where we started. From there, we have since then done almost all of the work that we were doing in the digital space. At that point in time, when Happiest Minds was formed, you had the traditional IT services companies just coming into the digital play, and they were claiming to be 20 or 30% digital, with 70% being traditional IT services. But here were we coming in at 90, 95%. In fact, 100% of our business was digital. So that was the transition that we were playing to, because we couldn't penetrate what was already deeply penetrated by the Indian IT services sector at that point in time. We found our space and we did well, which led to a successful listing, and that was the brand that we carried, or our statement which we said is digital, born agile. But as we transitioned from over the last 4 years, we have seen how AI has come in. We started facing customers with our generative AI services. That's the first thing that we did. When most of the other customers were trying to rechristen all that they were doing as AI, we were clear that we did not want to do that. We had to take a calibrated approach, really see what's the value that we are playing on their AI requirements, and generative AI was the place that we took. 18 months back, created a separate BU to address that requirement from the customers, which is different from almost every other IT services company. Everybody was then, talking about how much of AI that they were AI work they were doing. They were not differentiating between generative AI and the generic AI. Most of the things got, there was a little bit of greenwashing, I should say, but we decided to stick to generative AI, reported those numbers, created a solid go-to-market, and as you would have seen in the results, we are running at our run rate is about $8 million a year.
Mr. Chokalingam, you heard the management of Happiest Mind. They are quite optimistic on the growth plans going forward, with AI taking the main focus in the IT space, or in the mid-cap or the small-cap IT space. Do you find Happiest Mind attractive at the current valuations?
Probably now one can look at it, because the stock has crashed to 60% from 1,000 rupees 3 years ago consistently. That is because company failed to maintain the kind of growth they had in the initial years. However, in December quarter, quite interestingly, on year-on-year basis and Q-on-Q basis, they have posted some growth, which is quite unique. Not many companies were able to post. So considering the crash in the stock price and also in the performance December, and management's the optimism on AI, I would suggest hold and even buy if there is any further dip. Probably if IT sector doesn't have any serious risk from AI, I think this can be one of the best performers.
Got that view well. Thank you so much, Mr. Chokalingam, for joining this conversation, and always pleasure to speak to you at NDTV Profit.
Yeah.
Well, guys, this is all the time.